Welcome to today's stock analysis, where we are taking a closer look at the telecom giants Vodafone Group and Verizon Communications, exploring their intrinsic valuations using 5 key models. Stick around as we unveil a hidden gem trading at a substantial discount. Which company holds this intriguing secret? Join me as we embark on a captivating journey into the nuanced realm of intrinsic stock analysis, unraveling the mysteries and revealing the hidden gem that might just redefine your investment strategy. Our initial stop in the realm of intrinsic valuation brings us to Graham's revised valuation model, a creation of the legendary Benjamin Graham. This model enables us to determine intrinsic value based on 3 key inputs: earnings per share, the anticipated growth of the company, and the current yield of a AAA bond. Fortunately, our automated spreadsheet streamlines the process, requiring only the addition of the company's projected growth, readily available on platforms like Yahoo Finance. Upon incorporating the projected negative growth for Vodafone Group into this model, the intrinsic value calculation yields $22.95. Remarkably, this indicates that Vodafone Group's intrinsic value is approximately 156% above its current stock price. Applying the same methodology to Verizon Communications, the intrinsic value computation results is $21.56, revealing a substantial difference of -46% relative to the current stock price. Vodafone Group thereby seems to be trading at a discount while Verizon Communication is trading above its intrinsic value. Moving on to the next valuation model, we explore the Peter Lynch dividend adjusted fair value model. In this method, the Peter Lynch fair value is determined by adding the earnings growth rate and the dividend yield, and then dividing the result by the price to earnings ratio. The output is a value either above or below 1, where a value below 1 suggests an overvalued stock, while a value above 1 implies an undervalued stock. Upon applying this model to Vodafone Group and Verizon Communications, we get 2 very different results. Vodafone Group is above 4, indicating a very undervalued stock, and Verizon Communications is 0.57, again indicating that it is trading at a stock price over its intrinsic value. To refine this assessment, we perform additional calculations, although I won't delve into the specifics in this video to derive a more tangible fair stock price. For Vodafone Group, this computation yields a fair stock price of $37.29, approximately 300% over its current stock price. On the other hand, Verizon Communications' fair stock price is calculated at $22.69, almost half of its current stock price. Now, let's delve into the comparable company analysis, also known as the multiples valuation model. This approach involves identifying companies similar to the one under scrutiny and utilizing their price-to-earnings ratios to calculate intrinsic value by multiplying with the company's earnings per share. In our analysis, I've included comparable companies for both Vodafone Group and Verizon Communications. Focusing on Vodafone Group, the intrinsic value derived from this model stands at $67.39, a seeing 653% above the current stock price. Shifting our attention to Verizon Communications, the calculated intrinsic value is $38.66, very close to its current stock price. This comparison unveils interesting dynamics, suggesting that Vodafone Group is currently trading at a valuation significantly under its industry peers, while Verizon Communications might be trading at fair value. As we continue to explore diverse intrinsic valuation models, we aim to paint a comprehensive picture of the true worth of these companies in the market. Now, let's explore the dividend discount model, a method that delves into a company's dividend payouts over recent years. We calculate an average dividend growth rate, and this, along with the discount rate, is used to determine the intrinsic value of the stock. The spreadsheet also offers the flexibility to input a custom dividend growth rate, allowing for adjustments to be more conservative, if desired. Both Vodafone Group and Verizon Communications pay dividends to their shareholders, which allows us to use this model on the 2 stocks. For Vodafone Group, we leverage the yearly dividend information available on Yahoo Finance. By incorporating the total yearly payouts and setting the payout interval to yearly, we obtain an average dividend growth rate of -8.76%. As the minus creates problems for our model, we set the custom growth rate to 0. Utilizing a discount rate of 7.5%, the calculated intrinsic value for Vodafone Group comes in at $12.92. For Verizon Communications, a company with consistent quarterly dividend payouts, we leverage the dividend information available on Yahoo Finance. By incorporating the quarterly payouts and setting the payout interval to quarterly, we obtain an average dividend growth rate of 1.98%. Utilizing a discount rate of 7.5%, the calculated intrinsic value for Verizon Communications comes in at $49.11, slightly over its current stock price. Our final stop on this intrinsic value journey brings us to the discounted cash flow model. This model values a stock by estimating its future free cash flows, discounting them to present value using a chosen discount rate. It then factors in cash and cash equivalents, subtract total debt, and divides the result by shares outstanding to determine the intrinsic stock value per share. For Vodafone Group, we can source the necessary data from Yahoo Finance, including cash and cash equivalents, total debt, shares outstanding, and free cash flow data available online. When we integrate this data into the model, the intrinsic value calculated stands at $54. Remarkably, this is over 500% over the current stock price. Applying the same methodology to Verizon Communications, the model yields an identical intrinsic value of $54, a 36% above the current stock price. These diverse intrinsic valuation models provide us with a comprehensive perspective on the intrinsic values of Vodafone Group and Verizon Communications, offering valuable insights for investors seeking a deeper understanding of these stocks in the market. In the summary section, we've assessed and compiled all calculated intrinsic values for Vodafone Group and Verizon Communications, making strategic decisions on which valuation models to include in the final calculation. As the calculated intrinsic values vary and there is not a specific outlier, and we include them all in the final calculation to reach a representative average intrinsic value. Doing so, the mean intrinsic value for Vodafone Group is $38.91, which is significantly above the current stock price. Acknowledging the inherent uncertainties, a margin of safety of 30% is incorporated, leading to an acceptable stock price of $27.24. By changing the marking of safety all the way up to 50%, we get an acceptable stock price of $19.45, still more than twice the current stock price. In the case of Verizon Communications, all 5 models are included, leading to an intrinsic value of $37.30, very close to the current stock price. By applying a margin of safety of 25%, the final acceptable buying price hovers at $27.97, which is below current stock price. In conclusion, Verizon Communications' average intrinsic value, including a margin of safety, is below its current stock price. However, according to the calculations, applying even a 50% margin of safety for Vodafone Group still results in an intrinsic value that is 2 times the current stock price. Based upon this data, Vodafone Group emerges as the more favorable option of the 2 stocks and could be a potential hidden gem. If you found value in this video, don't forget to hit the like button and subscribe. It truly goes a long way in supporting our small channel. Got a specific stock in mind for analysis? Share it in the comments below. And if you want to harness these valuation models yourself, check out the intrinsic valuation tool featured in this analysis, available exclusively on our Patreon page. There, you'll also find a comprehensive valuation list for all stocks analyzed on this channel. For your convenience, the link to the page is in the video description below. Happy investing! Now, a crucial disclaimer: I am not a professional financial advisor. The stock analysis presented on this YouTube channel is intended for informational purposes only and should not be construed as financial advice or a recommendation to buy or sell any stocks. Until next time, take care and happy investing.